Hey guys, back with another daily update video. It is Tuesday, June 2nd. The market just closed at 4:25 p.m. Eastern Time, and I made some crazy plays today. So let's just get into it and take a quick look at the big board. There's a lot of green on this board, but it's rather misleading because it doesn't tell you the true story of what happened all throughout the day. If we look at the semiconductor sector, looks like it wasn't too bad, right? AMD is only down less than 0.2%, Nvidia, Intel, pretty much everything traded sideways, but that's all just because of power hour basically. So I'm going to talk about the other stocks I was looking at this week, and then we'll go into AMD last. So let's take a look at Micron. I told you yesterday in my last video that I was looking at getting into plays in Micron and AMD, but you know, Micron opened up today and it dipped like it typically does during the first 45 minutes or so of the day. And my first goal was to get into a play on AMD. So I was trying hard to get a good fill and a good amount of premium on AMD. And while that happened, by the time I got filled on my AMD positions, which I'll tell you about later, Micron started going back up and then it went down. I mean, I just didn't feel good about Micron early in the morning. So I didn't force a trade on. I just couldn't get a good strike price for a good amount of premium because Micron was trading a little erratically in the morning. But as you can see throughout the day, it kind of bled off throughout the morning. Then around 11:15, started rallying back, kind of traded sideways all throughout the day. And then per usual, you know, power hour happened. And usually in the power hour, either stocks just go up or they just go down. And I guess today, because it was a little bit in the red and then trading sideways, power hour said it's time to go up. So you can see Micron closed in the green at 46.84, but the vast majority of the day, especially in the morning when I was looking into getting into positions, it was trading in the red. So I just didn't have a good feeling about Micron. You know, I can't really describe it. It was just a gut feel of it just wasn't a good place to get into right now. So I did not make any trades on Micron. And again, if we look at the Fibonacci levels, you know, kind of how we mentioned yesterday that it broke below this Fibonacci level here at roughly 46.58, and that is actually the 50% Fibonacci level. And as you can see, you know, I said yesterday in my last video that it's either going to trade now in this region or it might come back up, and it broke back up through that 50% Fibonacci level. So tomorrow we'll have to have confirmation to see what it wants to do. Does it want to keep trading in this teal area above roughly $46.50, or is this just like a fluke and does it want to come back down and trade in this darker green area between the 43 and some change Fibonacci levels and the 46.60 Fibonacci levels? So that's also a reason why I just didn't feel good about Micron, because this might be a leg down, you know, who knows. And I didn't want to get into a put because the puts I were looking at to collect a good amount of premium were the 44 and 43.5 or maybe 43 strikes. So it was still trading within this Fibonacci level. So if it does decide it wants to keep trading in this level, you know, it's a little bit more risky for me, although given that today is already Tuesday, it would have to go this low in 3 days by end of day Friday. But, you know, like I said, my gut was just telling me it just wasn't a good time and a good premium value to get into Micron, so I held off. And then I kind of shifted my attention to Disney, because in the morning, Disney was kind of trading sideways for a good chunk of the morning, and then it started going down. So here's when it opened up at 9, 9:10, 9:30. So when the market opened, you know, I was looking at pre-market, just trying to keep my eye on what Disney was going to do. So it was trading a little bit sideways. At 9:30 to about 9:45, this is when I was focusing on my AMD trades. So I really didn't have time to get into any Disney plays, but it went down and then it went up really hard and stayed up. So up until about roughly 11 a.m. for those couple hours, it was in the green. And then, so that's why I definitely did not want to open up a put on AMD while I was going up, because again, I would not have been able to get filled at a good strike price for a good premium. So I held off. But then throughout the middle of the day, it went down and then traded sideways. So it was a decent play to get into towards the afternoon. But again, it was trading at around 118 all day long. And for me to collect at least a 0.4% return on my risk, I would have to get in at a $114 strike price. And if you go back to my video from this past weekend, I was really looking at getting into like the 109, 110 strike. I thought 114 was a bit high. So again, I also kind of got turned off to Disney. I was kind of hoping that it would maybe stay at 117 and can keep continuing down lower so I can get at like 110, 111 maybe. But, you know, I just didn't want to be in Disney at 114 if possible. You know I said in the previous videos that there should be good news coming out on Thursday and Disney price should go up even more. But it's not only that, it's the amount of capital that I would have tied up in this one trade, because in order to sell a cash secured put at the 114 strike, I would need $11,400 of my portfolio, which is almost half of it, which prevents me from getting into other stocks or other trades, or at least makes it harder. So all those factors combined, I also held off on Disney for this week. Again, I'm not saying it was a bad play. If I had much more capital, I probably would have made a trade on Disney as well. But it just wasn't for me today. And again, I don't want to force a trade. And if we just take a quick look at the Fibonacci level. So again, Disney broke back up and stayed above this 50% Fibonacci level. So it likes a 117. And so, you know, it looks like it's going to trade in this teal region. So if I had a put at 117 or less, I should have been secure, so my 114 would have been okay. But it was mostly because, like I said, I did not want to tie up so much capital in this one position. But if you had a trade on Disney, I'm assuming you're going to be okay for the rest of the week. Because like I said, I think the stock is only going to trade sideways or go up by end of day, because I think good news is going to come out on Thursday for Disney, which should help out this stock. And then the fourth stock I had mentioned this previous weekend was IWM. And I also was not a good, not really keen on this stock this morning because it opened in the green and pretty much traded in the green all day long. So IWM went up even more than it was yesterday. So it actually closed the day at 141. So again, for me to open up a good trade at 0.4% return on my risk minimum, I would have to get in like the low 130s. I think it was 132 or 133 strike. And again, I just didn't want to tie up that much capital. I mean, I would have tied up even more capital than if I made that Disney play. So, I'm really regretting selling off my $127 cost basis shares of IWM, but it's okay. I think we're going to have a correction soon because the market in general is nearing its all-time highs pre-pandemic, which does not make any sense to me at all. Because obviously GDP is down. I mean, we are in a recession. We're just going to confirm it in a few months. And not only that, but to add to that, now people are rioting and protesting and, burning down buildings and trashing businesses. So there's no reason why the market should be going up nor be at all-time highs. So it's very curious to see what's going to happen if we do get all-time highs. Are we going to break past that level and keep going up? Or is that going to be a very, very strong point of resistance? Time will tell, but nothing makes sense in the market right now. So that's why I'm very hesitant with my plays and just playing weeklies, because if things really start going downhill fast, I want to be as much cash as possible just because I don't want to end up bag holding stocks. So yeah, that's why I didn't make any plays on IWM this week. But you know what I made a play on already, don't you? I made some big moves on AMD, and I would probably say I made the riskiest plays this week than I have ever on AMD. So I'll tell you what happened with AMD and what I was thinking. So when the market opened, this was the stock that I wanted to get into first. So as soon as the market opened, I focused all my attention on AMD and getting in a good fill with a good amount of premium and at a good strike price. So as you can see, it opened in the red a little bit. And then right here at 9:30 a.m. when the market opened after pre-market, it did exactly what I wished it would do. It started dipping down, and then it went down even more. And then it stayed red all day long. So I made my play around 9:45, between 9:45 a.m. and 10 a.m. So it was within this vicinity. So AMD was trading in the very low $53 or high $52 ranges. So what I did was I opened up 3 positions on AMD. All are cash secured puts. So I sold one contract at the $53 strike, which at the time was out of the money. So it must have been around $945, $950 when AMD was just above $53 because it was an at the money put. And then I opened up another contract at 52, and then one more at 51. So I have 3 puts that I sold on AMD at 51, 52, and $53 strikes each. Now I'm fully expecting, or I wouldn't be shocked if my $53 strike gets assigned, and I kind of wanted to do that because I wanted to test that out because I'm very bullish on AMD. So I wanted to get assigned shares this week and then sell covered calls or sell the stock off for a profit next week. Because if you go back through my previous videos and my profit and loss statements from the prior weeks, I always end up making more money on the call side of trades right now than on the put side. So if I sold puts at like a 0.4% return on risk, I would get about $100 or so, give or change a few bucks, of return every week if I don't get assigned shares on my capital. And that's, just to do some quick math, let's say I invested all 25,000, or I have a little bit more than 25,000 now because of my gains, but let's just say 25,000 for a quick and easy round number. If I invested all $25,000 into options at a 0.04 return on risk, so that would amount to exactly $100 a week. So my plays are a little bit more riskier, but if you just wanted to make kind of safe, or really nothing is ever 100% safe, but as safe as you can while still collecting decent money, I could make all my option plays at 0.04% and collect what should be a relatively easy $100 a week. I mean, nothing is easy, but that's why I said relatively easy. But I didn't want to do that because I said I want to make more money on the call side if I can. So I kind of wanted to get my $53 strike puts assigned, and then hopefully my 51 and 52s don't get tested and they just expire worthless. But let's say worst case scenario, all 3 of my contracts get assigned. Let's just say AMD goes to 50 by end of day Friday. Well, my average cost basis should be $52 a share, right? Because I have 100 shares at 51, 100 at 52, and 100 at 53. So I should own AMD at an average price of $52. And AMD really hasn't traded at 52 in a long time. So if we just look at this quick chart here, actually we can go to the trading view chart. The last time AMD was $52 was roughly, end of May, mid-May. I mean, it was 52 for a bit earlier this week, but that was just like a fluke because it bounced right back up. And it looks like 52, 53 is a strong resistance level. I mean, the Fibonacci level, the 61.8% Fibonacci level, is a little under $51. So, it's not the end of the world if all 3 of those contracts get assigned to me. But what happened with AMD for me today was I ended up selling those contracts, early in the morning. And, I had mentioned before that AMD has some conference today. So it actually has the Bank of America Securities Global Technology Conference. And actually AMD is presenting at this conference. So I thought, that's going to be good publicity. I'm assuming they're going to have good news or have, some good groundbreaking tech that they're going to display or talk about. So I figured the stock would only go up. And this is actually happening right now. It was going to happen at 4 p.m. Eastern time. So it's actually on right now after hours. And the other reason why I was very bullish on AMD today is because I saw this article that came out at 1:20 p.m. Eastern time this afternoon. And Bank of America, that same company that's sponsoring or running that conference, they recommended buying AMD and NVIDIA. So AMD got a little bit of a pump or a little bump or promotion from Bank of America. So I thought that was only going to send the stock higher. And actually, Vivek Arya has buy ratings on both NVIDIA and AMD shares with price targets of $420 and $65. I mean, if AMD gets to 65, that's going to be fantastic, right? But you're going to say to yourself, that doesn't matter to me because I sold puts. So whether AMD goes to $53.01 or $65, it doesn't make a difference to me because my puts are going to expire worthless and I've already maxed out my gains. It doesn't matter how high AMD goes. It could go to infinity, and this week I'm still going to collect only the premium. So that's what I did, something crazy today. I just went out and with my remaining portfolio value, I just went out and bought 200 shares of AMD. So I locked in a price because by the time I decided to do this, AMD kind of shot up to above $53. And I said, oh, I don't want to buy them at a stock price higher than where I sold my puts. So I kind of was hoping and waiting for AMD to drop down all day long. I was just kind of watching the market for the first few hours in the morning. I didn't want to sit on my computer all day long waiting for the perfect entry. So, AMD was kind of flirting in the low 53s all morning long. Then finally, when I saw it dipping below 53, I kind of made a mental note. I said, if AMD gets below 53, I'm going to buy those shares at that point, because I saw where it was getting close. Like it went to 53.15 and then would just come back up. So it's very flirty with the $53 strike price. And so once it below 53, I sold my so once it broke below 53, I bought my 200 shares at that point and actually locked in a price at $52.95 a share. So in addition to the 3 puts I sold at 51, 52, and 53, I bought 200 shares of AMD at $52.95 each. So now you may be asking yourself, well, why did I do that? Why didn't I just sell 3 contracts at $53, let's say, and just get assigned shares that way? Well, I didn't do that because I would have to get assigned those shares this weekend, meaning they wouldn't be available for me to sell or sell covered calls on until this next Monday. I thought, and I'm hoping, that AMD is going to get a good pump from this conference after hours and then trade higher tomorrow and the rest of the week. So I wanted to buy shares now for 2 reasons. One, let's say we get a good pump this evening and the market opens up and AMD tomorrow morning is at like 54, 55. Well, I can sell those 200 shares flat out and collect a couple $100 of gain just like that. Or I can also turn around tomorrow and sell covered calls on those 200 shares that I just bought. So then I would essentially have a strangle on AMD going. So I'm going to play it by ear because I was checking out the options train on AMD, and if I wanted to sell covered calls on those 200 shares, because AMD is trading at 53.52, if I sold at $53, then that's basically at my cost basis, right? Because I'm at $52.95, that's only 5 cents away. So then I would only collect the premium. So if I sold those covered calls right now, I would collect $128 per contract, and I have 2 contracts. So I'd collect $256. And that's not too shabby for 3 days worth of holding 200 shares, assuming that AMD is above $53 by end of day Friday. But see how $53 right now is in the money? So that's why it's such high value. If, let's say tomorrow AMD gets to $55, let's just say, well, I could sell an in the money $54 covered call and now collect $75 of premium per contract, which would be $150 for my 2 contracts, plus $100 in premium per contract because I own them at roughly 53 a share, and I would sell them at 54. So I would collect $200 for my 2 contracts in stock appreciation, plus the $150 in the premium. So I would collect $350 if I sold $54 covered calls and they got called away. So what my plan is for this going week is I'm going to hold those shares and then just hope that AMD stock price goes up. And then what I can do is Friday, let's say best case scenario for me, Friday, AMD is trading at, let's just say $56. Well, then I can sell a $55 covered call that would be in the money if AMD is trading at 56. And that way I can basically guarantee as much as I can that those shares would get called away, and then collect a lot of money in stock appreciation plus my premium. So then I can also get out of my position in case something terrible happens over the weekend and the market decides to start dipping on Monday. So unless AMD just rockets up to like 60 tomorrow morning, if that happens, then I'll just sell off my shares and just not mess with contracts and options and just take my profits and run. But I'm expecting AMD to probably get to like 54 or 55 tomorrow. And if that happens, like I said, I'm just going to sell an in-the-money covered call for this Friday. Just take my profits, be cash going into the weekend, hopefully, and then start over next week. So it's a very kind of odd strategy. Like I said, I have a cash position right now. I have a little bit of money left over in my portfolio. I have puts on AMD, and I have 200 shares of AMD that I may or may not sell covered calls on to form a strangle. So it's very weird, but it does make sense in my head, and I think if all goes well, all I need is for AMD to now go up for the rest of the week, right? That's easier said than done, but as long as AMD goes up in value, then I have the potential to secure a lot of profit this week, because I never told you actually what I sold my puts for yet. So I sold my $53 put at $1.08, so $108. I sold my $52 put at 67 cents, so that's 67. And I sold my $51 put for 40 cents, so that's $40. So I collected $215 in premium by selling those 3 puts. So you can see right now, I collected $108 for the $53 put, $67 for the $52 put, and $40 for the $51 put. And they're lower now because, one day has passed, so theta decay happened. So this is another effect of time, because of the passage of time, the price of the stock didn't change much from when I opened those positions in the morning to the end of the day. But because one full trading day has passed, there's not much premium left in these contracts. So that was one benefit of getting in early in the morning. So I've collected $250 in premium so far just by these puts. Now, let's say I want to sell, let's just say AMD trades sideways, and now I want to sell a covered call at my cost basis, which is essentially $53. Well, I could do that right now and collect another $128 in premium for a total of $343, and hopefully get my shares called away. So I could make at least $343 using my strategy this week if AMD trades sideways or goes up for the rest of the week. Now, where it gets into the big money is if AMD gets to 54, 55, 56. Because then, let's just say I have my 215 for my premiums. Let's just say AMD gets to 56 on Friday. I could sell a $55 in the money covered call, collect $200 in premium per contract, right? Because it's $2 difference from 53 times 100 shares, and I have 200 shares. So I could collect $400 in premium, let's say, if it gets to 55, plus, let's just say $82 in premium for selling that covered call. I could collect $697 this week if AMD gets to, let's say, 55 or 56. I mean, the permutations are endless, but I think this is a good strategy for making some good money this week. But like I said, it all rides on AMD trading sideways or ideally going up. So let me know what you think of my strategy. I know this is a long video, but I had a lot of explaining to do, and I wanted to explain my thought process so people can learn from it. Obviously, none of this is financial advice, but if you have any questions or comments, please leave them below. If you have any suggestions for future videos, also let me know. And as always, happy trading.